Hi guys, welcome back to Pristine Case. So today we'll be looking at a very promising company in the waste management sector in the Australian market called Cleanaway Waste Management Ltd. So this company is essentially an integrated provider of waste management services in the industrial segment, in the environmental segment, as well as the residential segment, and notably it operates across multiple operating segments such as the solid waste and the liquid waste and health services, as well as the industrial and waste and industrial waste services. So these factors together position the company very strong in a competitive sense in the industry, because as a provider of integrated waste management services and catering to a number of clientele and a very diverse range of clientele, the company actually stands to establish a very strong brand presence within the waste management sector in Australia, and it actually remains a very promising emerging player in this segment as well. So as you can see, the company's revenues not only grow consistently but also have grown significantly over the past 5 years, where revenue of around 2.3 billion in 2020 has now increased to around 3.7 billion in 2024, while the company's earnings of around 112 million in 2020, which although declined significantly over the next few years to around 21 million in 2023, it has actually rebounded very strongly in 2024 to 156 million, which actually also marks its 5-year peak, as you can see here on the screen, which was previously observed in 2021 at $145 million. So this chart shows us the company's prospects for EBIT or profitability growth over the next few years, as this showcases the company's growth EBIT growth targets, which stood at around 302 million in FY23 and around 359 or 360 million in FY24. And the company has actually set a very encouraging guidance of around 400 to 425 million in EBIT during FY25, and further mid to long term ambition of around 450 million by FY26. And this chart also showcases what factors exactly will lead to this growth in the company's EBIT or the overall margins for the company. And actually, if you look at the company's financials as well, you can see a very strong pattern of net margin improvement in 2024 as well, apart from the company's revenue growth, because the company's revenue growth has clearly always been very consistent, but margin pressures over the past few years have actually impacted its earnings, which actually was a major improvement for the company in 2024. And it looks like the company wants to and plans to advance on this trajectory of improvements in its margins, because it actually remains very confident about its future sales and revenue growth factors. And you can see here that the company plans on making restorations which will add maybe 50 million towards EBIT, and it plans to focus on other factors which will probably deliver more operational efficiency, such as data and analytics and fleet transformation, all of which can improve the operational cost, or actually reduce the operational cost for the company. And apart from that, the company also plans on expanding its strategic infrastructure, which always fares well in adding scale to the overall operations, and can optimize a number of production processes, which can eventually end up reducing the company's overall cost pressures. And we can see here in this chart that the company actually plans on achieving at least 50 million EBIT growth through these initiatives alone by FY25, apart from the obvious earnings growth that its revenue or sales growth stands to provide the investors and the shareholders. So let's take a look at the company's charts for now. And as you can see here on this chart, the company recently broke through beyond its 14-day EMA while also trading above its 50-day and 200-day EMAs. And actually, if you see here, just before the start of 2024, the company's shorter term EMAs actually crossed and surpassed its longer term 200-day and 50-day EMAs, which actually remained a very promising sign of trend reversal for the security. And given the recent fundamental improvements and the fact that the security was trading considerably higher in the past despite delivering considerably weaker financial performances, highlights a very clear upside potential in the security. And although the company has been facing some sort of a negative market sentiment over the past few weeks, due to uh, efforts of its recent acquisition efforts of CWY Service Solutions, and these concerns have actually been raised by the ACCC, and it primarily revolves around the concern that the company's competitive position in the Melbourne waste management sector might become a bit too strong for the ACCC to allow this. But regardless, it again showcases the strong competitive strength of Cleanaway Waste Management, and these factors collectively showcases and provides a strong confidence and strong encouragement in the company's revenue growth prospects, while its recent efforts towards margin improvements and a clear upside potential on the technical charts all highlight the company as a very promising investment case.